Okay, so my name is Adiola. So because we do more than just look at what's trending to buy, so we're more involved in looking for companies that have the strong fundamentals for us to invest in. So we're very happy to have you here. So you've been at Altos for 26 years,
Yeah,
thereabout. Okay, so we're just
since
interested
96.
in what led to your journey.
It's interesting, of course, that what gets you into the journey is different than what keeps you staying on. So when you have a long journey like that, yeah, I don't think you make a decision to go onto something for 20 or 30 years. I think even if you have a vision, and we work with many entrepreneurs that have very big visions, doesn't mean they stay on forever. But some people do, and then you have to find a source of energy and a source of renewal and a renewed commitment along the way. So I think in the beginning it's something just trying something new, something different. I was at Bain. I was doing consulting, and that it was a good experience prior to business school. I didn't know what venture capital was. Um, and then after business school, I decided to get some operating experience. I was at a company, and then 2 years after I graduated from business school, and again, opportunity to start something with some friends, different reasons to start. And then what happens is you get on this journey, and the journey in venture capital, like you guys are on, is a journey of investing. I call it as like a spiritual journey. I think all the great investors find a investment approach that fits them. They don't copy somebody else's investment style. That's kind of like anybody, but it's not just investing in any pursuit, whether it's art, business, sports. The greats kind of emerge and come up with their own, unique footprint on the industry or whatever the pursuit. So the journey, what keeps me in it is again continuing to refine, continuing to understand how does this work, and it's solving a puzzle. Like investing is trying to solve a puzzle, right? Is this stock going to move up or down? Well, what moves a stock up or down? You keep asking questions. Well, the company successful? Is it making money? Is it serving customers? Is it providing good jobs for people, or are the employees unhappy? They go on strikes and they leave, right, for other jobs.
Yes.
Like you have to unpack it, try to understand what makes a company successful. And so this is all a puzzle. And of course, when you try to unpack what a company does and what makes a company successful or not, it all comes down to people. Because without people, you have nothing. You have no company. So what drives these companies? What drives these people that create these great companies? What drives the people that create bad companies, right? That destroy value, that make miserable jobs and exploit customers and destroy the environment. What creates those kinds of companies, and what creates the great companies that tries to do some good for the world, right? And I'm trying to unpack that, and it's about humans and human psychology and going back to that spiritual journey. So you keep asking questions about trying to understand venture capital, which is just an earlier stage version of investing in general. But investing in general is just a very interesting pursuit. It's a lifelong pursuit of trying to understand how the world works. And it's just one of those things that I have fun with that keeps me going on the journey for a long time.
Okay. So I assume that the investment, I went through your website and I read through the philosophy you have, the comparison between being a fox and a hedgehog, and I started to think.
Do I believe in these things because I was born a certain way?
Yes.
Yeah. So
Yes.
I think I thought about this a lot. I think I was probably more a fox than a hedgehog in the beginning, but I've come to understand the people who do these amazing things. I'm trying to understand, right? Like trying to unpack that puzzle, trying to understand what is going on, what made that happen. And I've tried to understand and realize, wow, it's these hedgehogs, right? And when I wrote that blog post, it was 2006, I think it was. The people that I have in my mind are people like Warren Buffett that I studied very, very much, and Sam Walton, right? These are people who become billionaires or become worth tens of billions or hundreds of billions of dollars, and they're still working. Why are they working? Like, and Warren Buffett hasn't had to work for money for 70 years. And he says he still tap dances to work every day at the age of 91. Like, why? Like, what drives those people, right? And it's not about the money,
Yeah.
right? So these guys are clearly just different, and that's what I call the hedgehogs. And so when I wrote that blog post, it was 2006. We did not make our investment in Roblox until 2008. So it was 2 years before I even met the guy, all right? Dave Bazuki, and it's like, well, that's a hedgehog, not a fox, right? Clearly, and so you can kind of see the extremes. Now, not everybody is in the extreme. Like everybody, we're all a combination of foxes and hedgehogs. But the extremes become much more clear, and that blog post kind of, tries to provide that contrast, and it's like a caricature. So I would say I was more like a fox. I was trying lots of different things. When I got out of school, I changed jobs every 2 years, and then I started Altos, and then now I've been there for 26 years. And in this pursuit of venture capital, trying to create companies with entrepreneurs that I think could do amazing things for the world, realize that, these hedgehogs are transforming. And I've learned by working with so many different hedgehogs over the years, I've just kind of learned and grown to like those people and grown to admire them. And I've kind of become that. And so what I realize is, I think I call serial entrepreneurs, or a lot of foxes, these are people who could be extremely capable and talented, and they could be very successful as foxes too, but they just have not yet found their life's calling. They just haven't found it yet. And then when they do find their life's calling and say, this is my purpose in life, this is my mission, and I'm going to do this for the rest of my life, and it's not about the money, right? When that happens, that's magic. That's when you become a hedgehog, from a fox. So I think it could be both. It's not naturally one way or the other, but we're all searching for that meaning.
Okay.
Yeah.
Okay. So does this philosophy, the hedgehog mentality and being a philosophy, does it include you holding onto a company forever, in quote now? Because at some point, do you let go? And if you do, why? Do you eventually let go of companies? Yeah.
Good. It's a really good question. Well, as Buffett likes to say, his favorite holding period is forever, but he doesn't always hold on to certain companies forever. So I think it depends on the company. I have learned that my biggest mistakes are selling the winners, and the great ones are very, very rare. And when you have one, you should be reluctant to let it go. But when you do want to sell, or when you want to let it go, is when you realize that you were wrong. You thought you had a hedgehog and you don't, or you thought you had a great company and you don't. The companies change because people change. People retire, they go away. Like HP was a once great company. The founders retire, or they die, or they go away, and the company changes. The character of the companies can change. The new people could take over, and they might not have shared the same values as the original founders or as the investors, and say if they are no longer good partners of ours, then we're going to leave. But if they continue to be good partners, just because we're up 1,000x or 10,000x on the investment doesn't mean we're going to sell. We might buy more if we see good things happening. All right, I have bought more shares, many stocks when I'm up more than 10x. I bought some shares of stocks that are when I'm up 100x. My record is I've bought more shares of stocks when I'm up 1,500x and over 2,000x. I'll still buy more if I believe that there's continued upside. Yeah.
Okay, thank you. Do you have any view on emerging markets like Mexico or Nigeria, or any potential unicorns in those countries?
Yeah, I don't have a view on Nigeria. We have come across some people now. More and more investors are investing there. It's a big market, obviously, and the demographic trends are very favorable. And I would not be surprised if there are a lot of unicorns. I think in Mexico we're going to have unicorns. We have made 2 investments in Mexico already, and it's very close to where we live in Silicon Valley in the U.S. And so we're more likely to do deals in Latin America than Africa. But I think Mexico could be a powerhouse over the next 20, 30 years. So I think a lot of emerging markets could surprise people. Of course, Korea, we went to Korea when it was not obvious and people didn't think we could have unicorns. Well, now we've had multiple decacorns. 5 of our entrepreneurs that have invested in Korea have become billionaires or multi-billionaires. You know, you can create much bigger companies than people expected in these little markets like Korea. So I think there will be other markets that will get capital that have the right kind of talent base and the demographic trends that should do really well over the next 20, 30 years.
While talking about purpose earlier, I need to know, beyond making money, what other impacts, what role do you have in the development of society?
I think that's a really, really good question. And I think the way that capitalism has evolved, especially since the 1960s, I don't think it was always that way, was this view that companies and investors are supposed to care about shareholders. And I think that's wrong. And I think that has given capitalism a bad name. And I think the capitalistic system that I see is a way of unleashing human creativity and productivity and way of organizing human potential to do whatever it is that we want to do for the world, like a lot of good for the world, right? It's a way of organizing. Just like, in evolution, you have these natural systems that evolve that if it works, it grows. If it doesn't work, it goes extinct, right? And so capitalism, I think, can be a great force, but you have to think about it as stakeholder capitalism, not shareholder capitalism, right? And all the critical stakeholders are starting with the employees. If you don't provide really good jobs, then I say you're just spreading more misery in this world. You're creating really terrible jobs where people are unhappy, they go home and they're cranky and they're like not good parents and not good husband and wives, and it's like the negativity just spreads. I don't like that, right? If it's providing good jobs, again, taking care of employees are a critical stakeholder, obviously customers are a critical stakeholder, shareholders are a stakeholder, but they're one of many. And then you have the society as a whole, the planet. These are all stakeholders, because without the society and the planet and the government and the regulators, without the laws that are governing, the conditions do not exist to create the company. And so you have a very crazy successful company and a billionaire is like, well, you don't own that. It belongs to the collective, and that should funnel back as a contribution to society into creating, again, better products for customers, more value, great jobs, again, contributing back to the community, right, in many different ways. Yes. So there are many, many different stakeholders, and I think capitalism done well, the great sustainable businesses, I think, have a balance across all stakeholders, not just shareholders. Yeah.
Okay. Thank you for that. Apart from the US and Asia, do you have emerging market partners in Africa?
No, we don't.
Partners.
Yeah.
No, not yet. Okay. Being a VC, what kind of stock compensation do you have?
Yeah, the typical VC model is you get 2% management fees every year based on whatever the assets are committed to the fund. And then after we pay back 1 times the fund, after we pay back the whole fund, whatever profit we get 20%. And then our investors get 80%. This is after we pay back the funds. So that's the typical model. Sometimes it's a little bit higher, sometimes it could be lower, but at 20%, 2 and 20 is pretty typical. Yeah.
Okay, thank you. And for being uncommonly patient, when you invest in a company, what at the start do you consider long term?
In the beginning, we always look at companies to see if we can go on we think about it in decades.
Okay.
We do. So minimum
decades.
10 years.
Wow.
We think about it in decades. Yeah.
Okay.
The great ones will go on for decades. If it doesn't go on for decades, it's not going to be a huge returner for us. I think it's unrealistic to think it's going to have a huge return in 3 years or 5 years or 7 years. You can have a very nice return, of course, but it's not going to be the really big ones. If you want it to be a Google or Facebook or Apple or Microsoft, Walmart, Berkshire Hathaway, these things all take decades for the really big ones to materialize. Yeah.
Okay. Okay. Could you share more insight into your first principle contrarian nature?
Okay. Well, we certainly I would recommend reading that blog post, and then for people who are interested, I would also recommend reading a lot of the Jim Collins. If you go to the Jim Collins website, he has the hedgehog principle in 3 different circles that are overlapping. All 3 circles have to overlap. So the one circle is, what are you passionate about, right? You have to be passionate about it, right? It has to be love, not just a grind, right? You're out there playing that game that you love, and then, but that by itself is not enough, because it has to be then supplemented with, what's the economic model? Because if you cannot make any money or survive pursuing what you love, then you can't keep doing it forever. But if you make enough, again, it's not about the money, but if you make enough, then you could just keep going, right? You could provide for your family, you could provide for yourself. You're not, you don't have to drop it, right? In order to get a job, like, this is your job, right? So that has to overlap. And then the third thing is something that you can be really great at. So you can be the best in the world at, right? Those 3 things overlapping, right, is like the magic in terms of the hedgehog principle. But the Jim Collins website has tons of information. The blog post has a lot more in depth you get into about the hedgehogs and foxes. Yeah.
Okay.
And our own limited partners, which are large institutions. We have a minimum investment from these institutions of $5 million for every fund, and we raise a fund, every other year, kind of a thing. So we have, some investors that have over $1 billion in kind of holdings with our funds. So it's not for smaller investors, unfortunately.
Okay. Thank you. I'm going to yield to Daniels now. He's here, so he wants to ask you a couple of questions.
Okay, sure. Okay, go for it.
Okay. The next thing I wanted to ask is about. I discovered that you guys invested in Roblox, and that's more of the theme that's going around now, the Metaverse and Web3 and all that. So I wanted to actually understand your take when it comes to virtual reality, because it's like the new buzzword. Everybody wants to attach their name on companies so that they actually make a lot of profits from the stock market. So what's your take into going into the Metaverse and virtual reality, AR and VR? What's your company's take on that?
Yeah, so I think a lot of people get confused, that they think the Metaverse is about AR and VR. And I used to work at Silicon Graphics, which was the original 3D graphics company before NVIDIA. This was in the 1990s. I was there from 94 to 96. And they were the pioneers. And from SGI, Jim Clark was the founder of SGI, started Netscape and went to the internet. And many good things have come from Silicon Graphics. And so back then I used to think, it was about the 3D and VR, and that was the future. And we were talking about Snow Crash, which was the science fiction book that originally talked about the Metaverse. And I think Roblox has kind of changed my mind. It's not about AR, VR. I think it's coming, but it's like, I think the truly immersive AR, VR is still decades away. And I think Mark Zuckerberg and Meta could invest billions of dollars a year in trying to advance VR technologies, but you could only go so fast. And I'm glad they're investing billions of dollars or $10 billion a year or whatever they want to invest, because it's going to help. And like, all of this investment is going to help. It's going to happen. I am convinced of it. But it's still far, far away. And in the meantime, we are already living in the Metaverse. It's just the technology is just not as good. It's a less good version of the Metaverse, where the technology world and our identities in online, whether it's online dating sites or Facebook or Roblox or all these other places we have, Some places we just have our picture, some places we have an avatar, but we are living in a hybrid online real and real world. Just like the Matrix, you plug into the Matrix and then you pull out and you're in the real world. You live in both worlds. So I think we're just in a continuum, and we're already living in the metaverse, and we're going to become more and more. The virtual world is going to be more realistic and more indistinguishable. But today, I would say, if you ask a kid who spends a lot of time on Roblox, as far as he's concerned, his Roblox worlds, all the different, we call it experiences, all the different experiences you have on Roblox is indistinguishable. And his friends on Roblox are indistinguishable from his real world friends, you know? Yeah.
So let me just add a little to that. So do you see your company actually diving more into the metaverse trend looking for new companies that actually are emerging, that are going into the metaverse, to invest in such companies that are not yet public?
Yeah, it's a good question. You know, now that everybody's talking about the metaverse and they have metaverse funds and metaverse companies, I don't like it. I don't like it. I think it's, again, people are kind of crashing the gates. It's just like Web3 and all this. You know, whenever you put like a new term on it and a lot of people come because it's the latest hot thing, again, I suspect that those are the foxes, not the hedgehogs. You know, the hedgehogs have been working at it for a really long time. The foxes are coming to whatever the latest hot thing is, and then they'll move on to the next hot thing. The hedgehogs are kind of, you know, they're not caught up with all that stuff. So, you know, like at some point along the way, we've been involved with Roblox since 2008. So this is our 14th year. In February, it'll be 14-year anniversary. So 14 years, and somewhere along the way, maybe 7 years, about halfway through the journey, we realized, hey, this could be very big, and it could be a very significant company. And we thought it could be a bigger, more important company than Facebook. So now, of course, Mark Zuckerberg has realized the metaverse is more important than Facebook. So that's why he changed the name of the company to Meta, because that is the future. We thought we could be bigger than Facebook, which people thought we were crazy. Even today, you know, if Roblox is only 50 billion, Facebook's $1 trillion, that still sounds crazy. That little company is going to be bigger than Facebook? Like, you're crazy. People will still tell me I'm crazy. Well, that's what we're trying to do, right?
So they're asking if you have any partnerships or any planned partnerships with emerging markets such like Africa.
So yeah, we don't have any particular initiatives in Africa at this time. We kind of go where our relationships take us. And so, you know, we were only in Silicon Valley for the first 9 years or so. And then I'm Korean, my partner Han is Korean. So he wanted to spend some more time in Korea. So we started to do Korea. And then from Korea, we start to do some other parts of Asia. But in general, we don't go after where the hot markets are. So like in Asia, for example, we did not do anything, no interest in China or India. No interest, because everybody else is going there. Why would we go there? But we have interest in Korea. And then we've done a couple of deals in Japan. And we recently did a couple of deals in Indonesia, and we have a deal in Vietnam. So we're exploring one deal at a time, and then that one deal leads to more deals, and we could do more. Same with Latin America. I never thought we would do a deal in Latin America, and Mexico specifically, but Mexico caught my attention because it was amongst, you know, when we were doing our research into Korea, we thought Korea is the hardest working country in the world in terms of number of hours worked. It's like, well, no, they're not the hardest working country. They're number 2. It's like, well, what's number 1? It's like, well, number 1 is Mexico. So that always got my attention. And Mexico is just our neighbor here. So I was always intrigued, but we weren't looking for a deal. But then we found one deal, we did one deal, and then now that's led to a second deal. So we might do more in Mexico, right? So we just go one at a time. And again, Mexico is not as not as kind of crowded as some other areas. Like we have no interest in going to Israel, for example. There are lots of VCs that have been investing in Israel. We don't have anything new to offer, right? Just like China, we don't have any new offer. Now in Nigeria or Africa, again, I don't know enough. And if we get a deal, we will take a look at it. It depends on the people that we know bring us in. Like the Vietnamese deal is not somebody from Vietnam. It's somebody who is Indian who used to work at Coupang, which is one of our Korean companies, the Amazon of Korea. And he's a very good guy. And for some whatever reason, he decided to settle in Vietnam. and that's his company. So we know him. We've known him for 4 or 5 years. Very capable guy from Silicon Valley to Kupang in Korea to now Vietnam. So we will invest in people and follow the people that we know. Yeah.
All right. Thank you. So the next question I have here is something happened since 2020 when the pandemic actually hit. So we have a high level of participation of retail investors in the stock market. So we have retail investors in many numbers of them looking at private businesses and the ones that are public. So how do you see this shaping the markets from 2 to 5 years time? And do you think this will actually change the way venture capitalists and hedge funds actually look at the market or approach the market?
I don't know if it's going to change the way they approach the market. It might with some people, but I think the retail investors, I think it's good that the retail investors are getting into the market. Again, as long as they try to do it the right way instead of trying to use the stock market as another form of gambling. If they think about it as buying lottery tickets, and I wrote a blog post called Venture Lotto in 2006, you should read that too. If people think about it as buying lottery tickets, they're not going to do very well, and they're going to lose money, and that'll be very unfortunate if they do. But if they think about it as really investing and really study these companies, study the great investors, try to find what works, try to understand how this really works, and think about it for the long term instead of short-term speculation. I think many retail investors have an advantage. They have a competitive advantage over professional investors, because professional investors have to answer to all these other investors that they have, and they worry about staying with the index. They can't fall behind, and so they follow the crowd. See, they have to follow the crowd because they can't fall behind the index. Whereas retail investors say, like, I don't have any investors, I just have to answer to myself, and they can do things that are apart from the crowd. And maybe it could be wrong, but that could give you an advantage. And retail investors, if they do it the right way, have a potential they have the luxury to concentrate. You have a larger portfolio concentration. They have the luxury to hold on to stocks longer. They don't have these pressures to kind of continue to kind of put up numbers every month, every quarter, every year. So if they are patient, good long-term investors, they could do very well.
So what 3 key lessons can you just tell the retail investors that you can learn from your success story so far?
Yeah. So one key lesson is, I think as a retail investor, you can have unusual concentration, right? Like no investor, like a Lou Simpson recently passed away. He managed the Geico portfolio for Warren Buffett for a long time, and he's a professional investor for 20-30 years. He said, in your lifetime, you're not going to know that many companies. But you could really get to know a small number of companies. You don't want to try to have this huge portfolio like all these professional investors. So you could have this concentration, and you don't have to answer to your investors, say, well, I'm paying you all this money, all these fees. How come you only invested in these 3 stocks, right? You don't have to answer those questions. You could just invest in the things that you know, right? And go really, really deep. So concentration, and then longer holding periods is the other one. You could hold for a long time. You can, because again, the professional investors have all this pressure of, hey, how come I'm paying you all this money and you don't do anything? You're just kind of sitting there on the stocks, right? So that, and then if I had to say the third thing is, again, it's related to the first 2 of concentration and longer holding periods, is you could just be more of an independent thinker, right? You don't have to think about the institutional pressure. See, professional investors, they want to make money as investors, but they also have a business. They have to run a business, which is pleasing their investors and showing that they're smart and showing all this other stuff. Like, none of that matters. As retail investors, all you care about is investment returns. As a professional investor, you are in the fund management business. And I would say that many fund managers, I call them fund managers, they get rich because they're good fund managers, not because they're good investors. I say, like my ex-girlfriend used to be a dentist, and you cannot get rich being a dentist, but you could get rich if you're a good business person and you build a good dental practice, right? If you have a good dental practice and good marketing, lots of customers, it doesn't matter if you're a good practitioner, you can make money if you're a good dental practice. Just like the fund management business, many fund managers become rich because they're good fund managers. They build a fund management business, but you're lucky because in the investing world, you could get rich just being a good practitioner. You don't have to build the business side. You could actually get rich. Because if you think about Warren Buffett, he made all his money, like 99.99% of his money, on a no fee, no carry basis. If you buy shares of Berkshire Hathaway, does Warren Buffett charge you a percentage fee for owning that stock? No. Does he charge you a carried interest because the stock went up and he wants you 20%? No. Like you could make the same amount of money as Buffett, same exact amount of money, right? So he made money on a no fee, no carry basis. So I say, like, hey, look, if you have confidence that you're a great investor, you don't need a business, right? You could just be a great investor and make a lot of money, right? So.
Okay, thank you for that. We have another question here from someone on the group. So he has asked, what key factors do you apply to evaluate new deals before you embark on investing in it?
Yeah, that's a really good question. And it always comes down to kind of three things. It comes down, of course, to the people, right? Hedgehog, Fox. To me, it's like, are these people, because I think I said we talk about it in decades. So it's like getting into a marriage, you know. It's like, are these people I want to be working with for a long time? And then what happens is, you know, these companies that we really get very deep into, they become really good friends of ours over a really long period. You know, when you work with somebody for 10, 20, 30 years, you see them, people who are single, who get married, who have kids, and then their kids go to college, and we've seen the whole life cycle over the 26 years, right? So people are important. Of course, the business, the unit economics. If it's a little bit later stage, if it's really early stage, it's just about the idea and the market. Do we like the idea and the market? But as the company develops, does it have an economic model that's capital efficient? We like capital efficient business models. We do not like business models like Uber and DoorDash where they're burning money. Now, even after they go public, they're burning so much money. That makes me very nervous. And those are the kinds of companies that I don't think are going to be built by great hedgehog entrepreneurs, because when you burn money, you put the whole business at risk. Because what if the markets collapse, then who becomes in charge? The investors, not the hedgehog entrepreneur, right? But if the business is generating cash, the entrepreneur is in charge, the founder is in charge, and say, I don't need your money. I don't need, if the market is not behaving very well, it's like, forget the market. Like Warren Buffett says, the stock market could close for the next 5 years, I don't care. Well, if you have a good business, you don't care, right? But if you have a business that's burning money and you have to go back to the market every year to raise more money just to survive, well, then the markets really matter to you. But if you have a really great business, markets doesn't matter. I don't care if the market's open or not. I'm just building this company for myself, and I'm creating jobs, I'm creating value, I'm creating profits, cash flow that I could reinvest in the future of the business. So yeah, it's really interesting. So it's really all of those kinds of factors: the economic model, the market opportunity, you know, the vision, and the people. Those are the three things that are really that we look for. And these days, you know, for me, you know, I don't ever do a deal just to make money. Like, why would I do that? Like, you know, Warren Buffett said, it's like, it's never a good idea to marry for money. And I guess he said it's like a marriage. Never a good idea to marry for money. But if you already have a lot of money, well, then it's a really stupid idea. So I never do a deal just to make money. I do a deal because there's something special about, like, we're trying to make a contribution to society, or something special about the people. And I am personally committed, and I want to help these people. I want to work with these people. There's got to be something more than making money to do a deal. If it's just that, then, you know, people retire. People who are just in it for make money, they retire. They go away. But people who are not in it for the money, they keep working, like Buffett until age of 91, right? Or Charlie Munger until age of 98. They're still working, they're having fun, right?
All right, the next question is, since you actually look at some of these factors, well, where does the politics come in? Because we know there's a lot of politics that comes into economics. So is there a place you draw the line because of the economics of a particular region may be favorable, but something about their politics doesn't rhyme well? Is there any line you draw and say, okay, due to the politics, I can't actually involve myself in this? or you just look at the economic situation of the situation?
Yeah, that's a really good question. I would say that the policy, the economic policy, political environment, all of that plays a factor, but it's not the most important factor. We are not macro investors. We are always micro investors. It's about the specifics of the company, right? And so the environment could be terrible, but the company could be very successful, right? If the company is very successful, we're always looking for the great companies are always the exception. There are always the rare exceptions to the rule. So I'm looking for the exceptions. So, Southwest Airlines is one of my favorite examples. Like, airlines are a terrible industry. Even Warren Buffett can't make any money on airlines. He always loses money on airlines, it seems like. But Southwest Airlines was an amazing company, and for 30 years outperformed even Microsoft and Intel as a stock, right? 30 years, right? So Southwest Airlines defies the odds. Or Nucor Steel. Steel has been a very bad sector to be in for 50 years. Well, Nucor has been an amazing company for 50 years, right? So I look for the exceptions. Or car companies, no car company could make any money, right? It's a terrible industry. Well, then Tesla, yeah. So I'm looking for the exceptions. Yeah.
What's like your advice like for young people? Because something about Nigeria is the population of young people actually, like, we have more young people than the elderly. So a lot of these people don't know the direction to go. So if you had just a few words to tell most of the young people that will listen to this conversation or that are listening to it currently, what will you tell them?
Well, I mean, young people have all of the future, all of the wealth of the world, as far as I'm concerned, right? I mean, Buffett might have all this wealth, but he can't take it with him. He would trade, all of his money for another 50 years, right? And he's having so much fun, right? It's about the fun, and so I would say, you have the future ahead of you, and you control it. You control it, because whoever's in power, they're going to die. They're going to be gone. So you control it, and you want to make the world a better place, and focus on the long term. Don't try to be transactional. Don't try to speculate. Don't try to get rich quick. I think that's going to get you in trouble. Don't be like all those people that you don't want to be like. Be like the people that you think are the heroes, that you admire, that you look up to, and say, hey, I want to be more like him, or that's a really nice person, like I want to invite him to dinner at my house, instead of like, oh, that's not a person that I want to hang out with, but he makes a lot of money, so I want to be like him. It's like, well, then if you do that, it's your choice. It's your choice. It's your life. It's your choice. Your happiness, your spiritual journey, and you do what makes sense for yourself. But I just think it's like certain paths you could take, I think could lead to more fulfilling life and more happiness. And other choices you make, maybe you make a lot of money, but believe me, you're going to regret those choices. It's not going to be good.
One last question before, I think this is the last question that came in, and I will take it and then we'll call it a day. Okay. This person is asking for just one book that you recommend that can actually open someone's mind into what's going on in the world and investing and every other thing. A book.
Oh, a book. Yeah, it's interesting because I read a lot of books. You can see all the books there, and I have books over there, and so people ask me for book lists and so on, and I'm hesitant to say the one book or the top 10 books or the top 3 books, just because every book leads to the next book and the next book and the next book and next book. It's follow your curiosities, right? And because when you read one book, it opens up more questions, and it leads to 10 more books you want to read. And so that's why I have to read so many books. And then the great books I go back to sometimes, and I read it again because I learn more. So you don't just learn everything from the book just by reading it once. So there are many, many great books, but I would recommend reading the books about the great entrepreneurs, especially if they wrote it themselves, because it's about the personal journeys, it's about these companies, and try to dig in and understand what makes these great companies. And I would try to read the books that are written, or read the writings that are written directly by the people, right? Instead of some ghostwriter or some professional biographer, right? So like all of Warren Buffett's, it's not a book, but all of Warren Buffett's letters that he wrote to shareholders, including going back to 1955 when he was a 25-year-old hedge fund manager. Those are written by him personally, and you could read his voice right? I would recommend that. I would read everything that Buffett has ever written and try to understand it. And I've read it multiple times. You know, I think that's really useful. I've also, I think we got very lucky. Again, I don't know how relevant it is to Africa, but you know, Sam Walton wrote that book because he was sick. He was going to die. And normally he would never sit down to write it. And everybody said, oh, you should write a book, you should write a book. It's like, no way. You know, he's having too much fun working and going hunting and doing other things. He would never, but he was sick. He was at home, right? So he wrote it. And so that's a gift to the world that lucky that he got sick, because he put down his thoughts and ideas to share with the world. You don't get to have a glimpse into somebody like that, an exceptional entrepreneur, you know, but that was like by fluke. So I think that's an interesting book to read. Thank you for all the great questions. It was really great to meet you. Adiola, I think, is frozen again. Her connection seems to be not quite as good as yours, but yeah.
All
Hopefully
right.
the rest of the group was able to hear most of the conversation. All right.
Yes. Yes.
Thank you.
Thank you.
All right. Take care.